there's this tendency for the market to check back to that level. It's kind of like going back to what I call the scene of the crime. Right. It doesn't always have to happen when you get these explosive moves. But again, looking at charts is a matter of probabilities. I would say about 70% of the time it does check back to that level, which, by the way, you could arguably say that's what's happening here, right? Here you broke support, and now look at what we're coming back into. We're coming back into the scene of the crime right at that level there. So that's why this is going to be such a big level, because most of the time, this is a bigger bearish flag versus the small bull flag here. Most of the time, this would be the move on Bitcoin that should occur. It's become something that we've become accustomed to, unfortunately, but really it's all eyes on where is inflation. And like Magic said, that's wage inflation. It's wage inflation then permeates through paying people that are picking apples more, that are doing this and that more, and then it goes into food prices. And so there's a lot more than just the war. Yeah, the war does have an impact on certain things, like grain. Obviously, Ukraine produces a lot of grain, but it's only one component. And I think at this point, hiking the Fed funds rate from 25 basis points to almost 5, that's going to have reverberating impacts on the market, on the economy. And I don't even think we've seen any of that yet, right? I mean, the lag effect for interest rate hikes is 6 to 9 months, which means you probably haven't even felt the last 275 basis point hikes yet at all in the economy. And so that's coming. And you can see it, by the way, Meta's laying off 20,000, almost every day there's another company announcing layoffs.
A few hours ago, the Federal Open Market Committee finished its two-day meeting to discuss monetary policy and interest rate hikes. Right after that, Jerome Powell gave a live speech, and things started to move as expected. In today's video, Gareth Soloway, founder of VerifiedInvestingEducation.com and chief market strategist of VerifiedInvestingCrypto.com, will make his new Bitcoin price prediction and chart analysis, but also talk about how Fed's decisions will impact the markets and how some of these will create new levels that will wipe out a lot of investors. So pay close attention until the end. This interview was recorded during Powell's speech, and you will see how the markets were moving. First things first, did you know this?
Now, institutions have these computer programs that anytime news breaks, they scan immediately for a set of words, right? And if it's like nuclear war, all of a sudden, right, imagine they scan that and they see that, it's going to be like they're going to automatically sell the market. So that's the initial reaction. And then what you usually see later on is the digestion of the actual information, where people say, wait, is that really what they meant? What are they, this and that? And that can be the next move that comes in around 2:30 or later.
You will see that happening in a few minutes right here, but let's see what Gareth has to say about the macro overview.
So what we have basically, this is the S&P 500. And one of the things that I think we should pay attention to, I'm going to get rid of some of these extra trend lines, is that right now you have the S&P. This is from the all-time high on the S&P to the second pivot, to the third, to the fourth. And then yesterday we had that wild gap up on the CPI, and we came right back below. So going into this is a huge level. If it breaks, it can free the market for a short-term rally, potentially maybe all the way up here to around 4,200 and change on the S&P. But you have to respect resistance. And again, markets are underneath this line. And every time we hit this line, we have a bigger sell-off. So just be aware of that. In terms of bias, I'm always bad at guessing what happens when the Fed comes out. So I'm not going to try. I could just tell you guys that we're at resistance. There's a chance that we could break it, but until it does, you have to be a little bit on the careful side here. When the dollar was going up, generally it's pushing Bitcoin or putting pressure on Bitcoin and cryptos. It's also putting pressure on gold, silver, as well as the stock market. So you can see the dollar's actually falling here on the daily chart. We've actually come in quite a bit. And then, the one thing I would just point out here is you haven't seen this in Bitcoin because obviously Bitcoin has other issues like the FTX debacle. But if you look at this drop in the dollar and then flip over to the S&P 500, look at the corresponding move up in the market, right? It's basically a 1-for-1 where when the dollar goes down, you generally have a move up in the S&P. So I do follow the dollar absolutely, as again, it does have an impact on the market. By the way, we are now, what are we, less than 3 minutes away from the Fed statement? The 5% is the Fed funds rate. I think the biggest thing for the economy is what is the 30-year mortgage, right? Because that's going to be generally what people are going to be getting if they're going to look to buy a house. And we've already seen the housing market come to a screeching halt. And just think about the chain reaction, right? The plumbers, the carpenters, the electricians. I mean, everything goes through that housing market. So the economy there's no doubt that we're headed to a recession in my camp. Just based on the interest rates even being where they are. At this point, I think any additional hikes, and my guess is they'll do a 25 basis point once in 2023 and then probably go to net zero, no more hikes at least. They're not going to cut, but no more hikes. But I think that, yeah, I mean, I would be shocked if we get above 5% on the Fed funds rate because I don't think the economy can withstand it.
So, what can we expect from Bitcoin if we're heading to a recession and we're still recovering from the recent black swan events in crypto?
Now, Bitcoin, number one, this is just a classic case of awesome charts, right? So what I mean by that is you had this move up, and then we had this beautiful bull flag. This is what's called a bull flag when you go sideways and consolidate. And that bull flag, just like the name says, it means that the probabilities are telling you there's a move up coming. And we've gotten that move here. Now, in terms of upside, like where the heck could we end up going? The biggest thing to me, there's going to be a big resistance coming up here that's right around 18,500. You can see how, number one, how all these lows right along here, they kept on hitting it, bouncing until we broke on the FTX debacle. So what you have to understand is that once support breaks, and it was clearly support over here, this now becomes resistance. So if Bitcoin pops here, it's got to fight through the 18,500 level to really get the next leg up. And so right now we're coming into resistance on Bitcoin. We'll see again what that means for the Fed statement. In general, when you break above resistance or you break below support, there's this tendency for the market to check back to that level. It's kind of like going back to what I call the scene of the crime. Right. It doesn't always have to happen when you get these explosive moves. But again, looking at charts is a matter of probabilities. I would say about 70% of the time it does check back to that level, which, by the way, you could arguably say that's what's happening here, right? Here you broke support, and now look at what we're coming back into. We're coming back into the scene of the crime right at that level there. So that's why this is going to be such a big level, because most of the time, this is a bigger bearish flag versus the small bull flag here. Most of the time, this would be the move on Bitcoin that should occur. It doesn't mean it will have to happen here, but I think investors need to know probabilities, and probabilities are favoring a hit of that line, and then we should start to move down again off of it. It certainly doesn't give us a lot of upside here. I'm hopeful that maybe, the greatest Fed statement could just rocket us through that level. But again, it's we'll have to see if that's the case.
So as Gareth was saying this, Powell was getting a statement ready, so keep paying attention. Now, as we know, macro always affect the crypto markets as well, as they still correlate to the Nasdaq and the stock market. So, what can we expect next as fear increases due to inflation and unemployment?
The war at this point is now becoming more the norm. It's become something that we've become accustomed to, unfortunately. But really, it's all eyes on where is inflation. And like Magic said, that's wage inflation. It's wage inflation then permeates through paying people that are picking apples more, that are doing this and that more, and then it goes into food prices. And so there's a lot more than just the war. Yeah, the war does have an impact on certain things, like grain. Obviously, Ukraine produces a lot of grain, but it's only one component. And I think at this point, hiking the Fed funds rate from 25 basis points to almost 5, that's going to have reverberating impacts on the market, on the economy. And I don't even think we've seen any of that yet, right? I mean, the lag effect for interest rate hikes is 6 to 9 months, which means you probably haven't even felt the last 275 basis point hikes yet at all in the economy. And so that's coming. And you can see it, by the way, Meta's laying off 20,000, almost every day there's another company announcing layoffs. It just hasn't really filtered through to the jobs numbers, but it will. It's coming. Just like with transitory, they were totally off base. And I think we have to remember that, yeah, these guys are good economists maybe and stuff like that, but they're still human beings. And I think they still get kind of carried away. Like the fear of COVID probably made them overreact with stimulus. And then now you have the other side where they were wrong on transitory. They have egg on their face. And so what do? They overcompensate the other way. And it's just like, it just keeps going back and forth here. And the economy is ultimately paying the price. So I do think that in general, they're aware of that, but they probably are saying, hey, listen, would we rather tighten too much and force a recession or not tighten enough? And then inflation gets out of control again. And I think they're going to err on that harder course versus the weaker course. Because again, in the 1970s, Volcker, right, they stopped raising after a while and they kind of got lax, and then inflation came roaring back. And Jerome Powell has definitely kind of referenced that and said, hey, we don't want that to happen again.
And right away, the statement comes in, Bitcoin starts to move again. And in a few minutes, Gareth's prediction starts to make more sense as to why this will probably be its next move and how it will affect most investors.
We discussed just before coming out is that we had to respect this retrace to the scene of the crime. It didn't quite hit there. That was about 18,500, but it got to 18,375. And now we're starting to come in here. So let's hope, obviously I think we generally prefer Bitcoin go up for the most part. Let's hope we're not starting to see that next leg lower, which again, this bigger pattern is suggesting. So here you had the break point of support. This was now broken. Now it's come back to retest that. And usually again, probabilities signal a down move coming in. Magic is the day trader when it comes to crypto. But the one thing you can see on here, which is just fascinating, is that look at the high of this consolidation area, like right through here, and then look at the low on Bitcoin. It went right there and bounced. So again, I'm no day trader on Bitcoin, but that was a good technical level right there. Now it's starting to come down. Next spot on Bitcoin for me, I would be looking at around 17,630. That would be your next support if this first support breaks.
In this incredible interview, Gareth replies to one question on top of many people's heads. Can Bitcoin's halving help prices change? And finally, get Bitcoin to the green.
So the biggest things for me in the crypto industry is, number one, we have to get that transparency through some sort of regulation, right? And again, even myself, I'm really kind of hesitant on investing more money in Bitcoin or anything else until we have some ground rules that we know, the rules for exchanges, the rules for tokens and everything like that. So I think that's number one. And then that alone will start to potentially put the bottom in Bitcoin and some of these cryptocurrencies. And then what you do is you kind of say, okay, as we get into 2023 and the later portions, let's say the economy slips into recession, then you get to a point where you're saying, all right, now where is money going to be invested? Because institutions have to put money places. And I think the dawning of this transparency and regulation in crypto, it probably makes crypto, at least Bitcoin specifically, maybe Ethereum, become very attractive. And I think, again, that can actually create Bitcoin or make Bitcoin the asset that actually can go up even when the equity markets go down. Right now, we know the assets are correlated, but I do think there's a change coming, but it needs that transparency first.
And that's it for today. Please leave a like and subscribe so you can catch all of our daily crypto uploads. If you enjoy our content, go ahead and check our other videos on Gareth's prediction. We have a ton of new content you will love to watch. Thanks.